Welcome to the Markets Happy Hour podcast, a weekly markets update for investors the world over. Each week we discuss inflation, geopolitics, interest rates, equity markets, and other asset classes. To try to answer the question, what does this mean for my investment portfolio? Let's dive in.
And they're weighting in size, because if we look at the amount of money that's now in money market funds, the so-called dry powder fund building up on the sidelines, 8.3 trillion, a new high, sitting on the sidelines. Clearly, cash is not a drag on portfolios today. If they're making a decent return, it's not phenomenal after inflation, but it's not like negative return that it would have been in the past. So how do your clients feel about cash? Are they happy to have some sitting there? And obviously you need to have some liquidity for various cash flow needs. But would you say there's a comfort level with having a certain amount of cash on the sidelines today?
They always want to know that there's something that they can easily tap in an emergency, whether it's that car, whether that's home issue, whether the prices are going up, whatever it might be. They want to know that they have a certain amount of that easy tappable money. And I think now more than sometimes it's, okay, I might be missing out a little bit on the upside in the equity market, but I know it's there. And if and when, because we're still in volatile times, the market comes down, then I'll feel my emotions around what I still have is a stronger emotion than the pain of losing.
Yeah. And obviously this wall of money is important because it's driving activity in equity markets, because we see this as being essentially dry powder that is there poised to enter markets whenever the opportunity presents. And I think this buy the dip mentality is pretty alive and well, coexisting with its cousin FOMO, the idea of fear of missing out. So therefore we have this cash on the sidelines, which is really making these dips in markets much more short-lived than we've seen before. This chart speaks a little bit about momentum and the semiconductors in particular, and just how the AI wave in markets has really led to this explosion of momentum. And clearly, this is not our grandmother's equity market that we're looking at today. It's a very concentrated market dominated by a few large players. And I'd say, just in terms of some other charts we've been looking at recently on this podcast, the dividend from equities have been essentially diminishing. It's not really an income play anymore. And equally, because bonds have looked okay, as we mentioned, cash looks okay, the equity risk premium seems to have come down. Are investors being paid to take risk in equities? And I suppose that's another question. And then when you think about your clients, and do they think about equities as something they want to know on a granular level, stock by stock? Do they think about it as just somewhere they get their growth from? How do your clients think about equities, and are they concerned about some of these things we've been mentioning?
I think overall they see equities as, and as we propose to them, this is the growth engine, the offense of your portfolio. And so it's much more of a broader basket discussion than it is necessarily stock by stock. Now, as you mentioned and referred to, there are certain stocks and companies that are more newsworthy, if you will, and they like to hear the news in that front. But I think when they peel it back to what's my portfolio, what are we doing, they want to be less about snazzy and having, those certain named companies. And again, as we've talked through, are you diversified? Are we rebalancing? Have we managed the risk as much as we can, knowing this is a long-term game, not what's going to happen in the next week or month, which unfortunately right now, a lot is happening in those short time frames.
Yeah. I think that's right. We mentioned we as investment professionals sometimes assume that clients do want to focus on the latest news story or the latest stock to cross the $1 trillion barrier or the latest NVIDIA release. But actually the focus is much more holistic often in terms of, will there be enough in my portfolio to take us to retirement and beyond? And clearly that engine is a key part of that. The next slide I wanted to talk about was around these IPOs, because clearly there is a tremendous amount of noise and I'd say puff and excitement in the marketplace around 3 pending IPOs: SpaceX, which has already been papered and announced, Anthropic, which has just been applied for and announced, and then OpenAI probably following hot on the heels of Anthropic. And I suppose what surprises me a little, having come only in the last 5 years into private wealth, is just that the desire to participate in something which is probably pretty frothy when we think about the valuation that SpaceX is likely to come out at, and just the lack of, I suppose, identifiable revenue flows. But why is it that there's this desire to get exposure to these IPOs?
I think, the flip side or part of the fear of missing out, right? Think back to just people in general, our general natures. We want to participate. We want to be a part of what could be that fun and exciting news story that everyone's interested in. We want to be part of the popular crowd, if you will, and not necessarily knowing often what happens with IPOs in the short time frame when it comes out. And so, gosh, our world definitely comes back a lot to emotions. And sometimes maybe we talked about taking action when you shouldn't take action. And just that kind of get in there and be a part of it.
And I think how much of the discussion is around this behavioral tendency, because there is, as we mentioned, FOMO, we mentioned this, the idea that, there's a need to keep cash on hand for a rainy day, but equally a desire to participate in the hot stock or the hot issue. And even to say you own a piece of Elon's dream, and that there's an element of that being exciting too. When you think about maybe AI more broadly, and this is, something that I think we are seeing as being really gone from a kind of a financial issue and a workplace issue to a moral issue, even around AI and its potential to displace jobs, its potential to disrupt humanity in many ways.